Hello and good afternoon. You're tuned into Market Fatafat. I'm Ankita Saxena. With me is Ashish Advari. In the next half an hour, we'll take you through all the top buzzes in trade, either on the back of news flow or on the back of technical charts. But before we get going with the show, let's take stock of how the market texture looks like at this juncture. And it's turning out to be a good Friday for trade today. In fact, Nifty has managed to scale the 23,800 levels, 0.6% gains coming in there. We are sitting at the highest point of the day. Also, Nifty Bank is following suit. That is trading up almost 700 points, 1.3% uptick coming in. 54,150 level is what we have managed to scale on Nifty Bank as well. In fact, the entire financial basket is seeing a recovery since yesterday. Also, let's talk about the broader end of the market. That was trading flat in the morning. That has also picked up steam. We have mid caps that is trading up almost 0.3%, and small caps also trading up 0.25% higher. Let's talk about the sectoral gainers. Like I mentioned, the financial pack is leading from the front. Recovery since yesterday, 1.5% gains coming in. Shriram Finance, Axis Bank, ICICI Bank, Chola, Jio Finance, Bajaj Finance, all of them are trading with gains of 2+%. Nifty Bank is also, right after that in that pecking order, and Nifty Auto is also in the fast lane with names like Bosch, Sonacom, we have Ashok Leyland, Aisha Motor, Uno Minda, all of them trading with gains of 1.5+%. On the back foot, we have Nifty Media that's trading with cuts of 1.2%, Nifty Pharma that's down 1%, and IT is very, very marginally in the red, trading with cuts of 0.1%. So these are the sectoral gainers and losers. But the market breadth looks tilted in the favor of positive. So it is a positive day coming in. We have a couple of other buzzers in the trade. We'll talk more about that. And for that, let's get going with the show.
Well, yes, but before that, let's also take a look at the stocks that are reacting to their earnings, especially on the back of fourth quarter results. And on the positive side, we should get the chart of Honasa Consumer for you on your screens. Very strong set of results because of which the stock is soaring in trade. Very strong fourth quarter management outlook positive. The stock is up 8.25% in trade today. Other than that, Viatech Wabag, another counter where fourth quarter results were very strong. That chart should also come up for you on your screens. That's Viatech Wabag for you, up 2%. And GAIL on the losing side, of course, we didn't have very strong numbers from GAIL this time around. Volumes were on the weaker side because of West Asia conflict. But despite that, the stock has recovered from the lowest point of the day, and it is now trading with gains of 2% at this point in time. But the numbers clearly were on the weaker side. On the negative side, we have Max Healthcare, a Nifty 50 candidate. Very weak set of numbers. It was a miss across all parameters, because of which this stock is now down more than 5%. We have LG Electronics and Aurobindo Pharma amongst a couple of other losers from the Nifty pack, and all of them reacting to their numbers negatively. That's LG Electronics for you, down 2.5%. And Aurobindo Pharma from the Pharma pack is also continuing to remain under pressure today. In terms of other individual stocks, let's talk about a couple of banking and financial services stocks because they are gaining in trade today. Something like ICICI Lombard should come up for you on your screens. That stock is soaring in trade today. We have Shriram Finance and ICICI Prudential amongst a couple of other gainers from the financial services pack, because that pack clearly is doing very well for itself. That's ICICI Prudential for you, holding on to gains. ICICI Lombard also up 1.5% in trade today. But let's get going then, and this is a show where we discuss all the stocks that are in focus today. On the technical side, we are joined by Ajit Nayak, Senior Technical and Derivative Research Analyst at HDFC Securities. Ajit, will come to you in just a bit, but before that, let's talk about JSW Cement. And this counter has reported strong set of numbers yesterday during market hours. The stock was up 5% yesterday. It is up another 8% today. The stock clearly has gained 12 to 14% in just a matter of 2 trading sessions. This counter reported very strong set of numbers for the fourth quarter, and across all parameters, clearly it has been a big beat. First up, let's talk about revenue figure. That saw a solid increase on a sequential basis. We had margins which expanded to 19% versus 17% that the company reported same time last year. Profitability, in fact, grew 11 times on a sequential basis. This was on account of solid top-line growth, tax benefits, and improved operational efficiencies that the company enjoyed in the fourth quarter. But most importantly, management outlook for demand continues to remain very positive. They're saying that demand in April was muted, but they've seen significant improvement in demand from the month of May. And as far as cost efficiency measures are concerned, they're looking to reduce costs by 100 rupees per ton in FY27. So that is another positive because of which the stock is up 8% in trade today.
All right, let's move on from there to the next counter that Ajit you've picked out for us. Dalbros Auto that you've picked out. This one's soaring away in trade with gains of 13+%. Tell us on the charts, do you see this positive momentum to continue? In fact, in the last 1 month, it has traded up 30%. Do you see this to continue, and what are the levels to watch out for?
Yeah, if you look at the Talbros Auto from February 2025, it has been trading in a very broad range. So now it is a time where it has given a breakout, and the breakout has happened in the early April, so late April. So near 29th April, we have seen a breakout with the good volumes. And before the breakout, it has a spectacular run from 224 till 318. After that, we saw that the stock was consolidating in a narrow range between 350 to 380. And now we also know that there is a good set of numbers which has reported by this company, and volume has also picking. So if we marry both the technical and fundamental aspect, this is looking very strong on charts. Now 340 to 330 level has become a tight base for the pattern for the stock, and I think the stock has potential to test even 450 to 500 level in coming months. So looking from weekly, daily, and monthly perspective, this stock particularly is looking very good on all technical aspect. It is also trading above all important moving averages like 20, 50, and 200. And the slope of the all moving average is quite positive. RSI is also testing about that 60 zone, is holding the 60 zone, indicating that there is a good potential for the stock in coming session.
All right, let's move on from Talbros Auto to the next counter in question. This is Honasa Consumer that is doing very well in the trading session. In fact, it is trading with solid gains today, almost 9% uptick coming in on Honasa on the back of its strong Q4 results. Good set coming in, beat on all accounts. In fact, they have scored the highest ever quarterly revenue and EBITDA. Let's take a look at the revenues first. It's an uptick of 23% at 657 crore rupees. The PAT is also at 162% uptick. 69.2 crores is the PAT, and the EBITDA sees a growth of 2.8x, and that sits at 77 crores versus a 27 crore on a year-on-year basis, and the margins are also seeing an expansion of 665 basis points. The board has also approved its maiden final dividend of 3 rupees per share. Besides that, their brokerages note like Jefferies that has come out with a note, and they're maintaining a buy call on the stock, and they've given a target price of 565. It said that Honasa Consumer was firmly on strong growth path after going through a challenging phase during the distribution realignment. CLSA has also retained its outperform rating with a target price of 434. On the back of that, Honasa is in focus.
Well, yes, but let's also put the spotlight on GAIL. Now, this counter had reported weak set of numbers, but despite that, the stock has now recovered from the lowest point of the day, trading with gains of 2% as we speak. West Asia crisis-led supply disruption of gas has impacted volumes for the company in fourth quarter, and that clearly weighed heavy on the numbers as well. As far as volumes are concerned, gas transmission volumes declined 6% sequentially, with gas marketing volumes, polymer sales and LPG transmission volumes declining anywhere between 3 to 6% on a sequential basis. Profitability has declined as much as 40% YOY, and even on a sequential basis, we have seen a decline of about 40% when it comes to profit. EBITDA too has seen a massive decline of about 50% on a sequential basis. Morgan Stanley continues to maintain its equal stance with a target price of 150, and they believe that the weakness that we have seen in the fourth quarter on account of West Asia crisis is likely to continue in FY27 as well. So on the back of that, the stock of course has recovered from the lowest point of the day, but despite that, weak set of numbers that GAIL has reported.
All right, let's move on to the next counter. Ajit, you picked out Siemens India for us. Tell us on the charts, how does it look like? In the last 5 days, we are seeing a bit of an up move coming in on Siemens India. What are the levels that you're tracking then?
Yes, if you look at the Siemens India from 26th May 2025, it was in a broad range consolidation, and last couple of weeks ago, like 13th April, we saw a breakout, and after that breakout, we were looking for the stock to give a healthy correction, and we did see a healthy correction near 3,450 odd levels, and at that near that level, it has made a good bullish hammer kind of a pattern. So it indicates that there is a good momentum and buying is seen across multiple time frames. So hence we recommend this stock. The important support for the stock is 3,470 odd levels and 3,600 levels. And if the stock breaks 3,850 level, the stock has potential to move up to 4,200 to 4,400 level. I think the uptrend is now in process, and sooner there is high probability it may test 4,200 levels looking at all the different time frames. Also, it is also trading above the important moving averages like 20 and 50-day, and all the positive slope indicates that there is a good potential in the stock to continue its bull run.
All right, let's move on then to the next counter that is in focus, Max Health. That is in focus on the back of its quarter four results. Now, if you look at the scorecard, there's been a miss that's coming in on the revenue, EBITDA front. The margins, however, were in line, but the PAT also saw a miss coming in. And on the back of that, that stock is down and out 5.3%. Let's take a look at the scorecard then. As far as the revenue is concerned, that's trading up 5.6% at 8,853 crores. The EBITDA is also came in at 1,801 crores versus 1,792 crores, which was below what the street was penciling in. And PAT also see an uptick of 2%, which was also below what the street was penciling in. And on the back of that, Max Health is declining away in trade with cuts of 5.3%.
Okay, so that's a Nifty counter which is declining 5% on the back of weak Q4. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side. Welcome back. You're still tuned into ET Now, and this is a show where we discuss all the stocks that are buzzing in trade. And first up, let's put the spotlight on Dalmia Bharat. And this is on the back of an acquisition, an agreement that the company's wholly owned subsidiary Dalmia Bharat Cement entered into, where they've executed business transfer agreement with Jaiprakash Associates in order to buy cement capacity in central India, which has been done at an enterprise value of 2,850 crore rupees. Now remember, this has a capacity of about 5.2 million tons per annum cement capacity and about 3.3 million tons per annum clinker capacity, and this capacity is located in central India, Madhya Pradesh and Uttar Pradesh, to name the states in particular. Now at 2,850 crore enterprise valuation, the valuation actually comes out to about $57 per ton. And this valuation is pretty reasonable given the recent transactions that have happened in the cement sector. It will also help Dalmia Cement expand in the central India region, so that will be another positive. It also has ongoing expansion plans, and it says that it is looking to reach capacity of 67 million tons by FY28. So clearly a big acquisition that has come through, because of which the stock is in focus today.
All right, moving on to the next one. Let's talk about Midhani. Coming to you, Mishra Dhatu, you've picked out on the charts. This is done. This is almost rallied 30 odd percent in the last 6 months. Ajit, tell us on the charts, what are you seeing? Are you seeing more upside to this one?
Yes. So if you look at the chart from 30 March 2026, it has rallied, and when it rallied, it did surpass the 390 level, which was a previous swing high. So whenever that previous swing high is taken out and it is sustained, we consider that the new uptrend would emerge for such stocks. So the typical pattern has been also we can see on Mishra Dhatu Nigam. And after a rally, it has halted near the 440 level, which was also a supply zone. From there on, we have seen that market tried to correct, but whenever the correction took place, it held the important moving average of 50, and it did not break 390 level. So this kind of a pattern gives us a confidence that the stock is now in an uptrend, and there is a good possibility the stock can also continue its upward momentum. So the traders should look that the Mishra Dhatu Nigam should not break that 389 level. And if it doesn't happen, then there is high probability it may test 480 to 500 level, because it has already seen 30% rally and then some consolidation. And after that, it will also rally the same proportion which it has rallied from the low of 269. So the minimum target which we are looking currently is near 460 to 480 level.
All right, let's move on from Mr. Dhatu on the charts to Aurobindo Pharma, that's in focus on the back of its Q4 results. It is tanking away in trade. Though they posted a largely in-line set coming in, it's down and out 6%. Let's take a look at the numbers. Its profit increased 2% to 920 crores from 902 crores on a year-on-year basis. That was largely in line. The revenue stood at 8,853 crores. That was up 5.6% from the previous 8,832 crores. It was up 4% compared to the street estimates of 8,676 crores. As far as the EBITDA is concerned, that declined 5% to 1,700 crores from an earlier 1,791 crores on a year-on-year basis, and that was down 3% from what the street was penciling in. Its margins contracted to 19.2% from 21.4% on a year-on-year basis. That was also lower than what the street was penciling in. As far as Aurobindo Pharma's post-call conference is concerned, in their con call, they said that they see the EBITDA margins improving to more than 21% in FY27. It said that $400 million is a reasonable base assumption for the US business compared to $387 million in the fourth quarter. On the back of that, Aurobindo Pharma is in focus.
Well, yes, but let's also put the spotlight on Central Bank. The stock is in focus on the back of OFS, offer for sale, where the government is looking to sell about 8% stake in the company. This has been done at a floor price of 31 rupees per share, which implies a discount as compared to yesterday's closing. The stock is today sitting with a cut of 6.5%. Now remember, the OFS is open for non-retail shareholders today. It will open for retail shareholders on Monday. So clearly we are seeing we could see some bit of selling pressure on the stock in Monday's trading session as well. But today the stock is sitting with a cut of more than 6.5%.
All right, let's move on then to the next one on the charts. Sheela Foam, Ajit, you've picked out for us. That one is also up and away, 8% in trade. What are the levels that you're tracking here?
So, Sheela Foam, if we look at the chart, it was in a total downward momentum. So now, from couple of months, we are closely watching this stock, and it is making a round basing pattern at the bottom. So the neckline of the this rounding base pattern comes to around 628, and it is now sustaining about that level. So once we get a good close above this level, so there is high possibility that it will test 775 to 750 odd level, because after that base there is much higher chances that it will stop its downward trend and continue with the upward momentum. So we are looking for a reversal kind of a setup in Sheela Foam. Even if we look at the result, it was very good from a result perspective also. So which also gives us confidence that there could be a turnaround in particularly this stock, and we can see some more upside.
Let's move on from Sheela Foam to LG Electronics. That one is trading very flat right now on the back of its Q4 results. We do see a miss coming in as far as
the word coming in from the management of LG Electronics. But Ajit, thank you so much for taking your time out and joining us here on ET Now and discussing all those stocks. That's all the time we have on this edition of the show. Thanks so much for tuning in. Closing trades will come up next.